What is good, people? The markets are officially now moving again. It is Tuesday as of recording this, and it looks to be as if most of the markets are actually starting to slightly fall off again today. Now, previously over the last week, we've seen markets just go volatile, which was to be expected. At this point, we're seeing Schiller's PE nearing around the 40 mark, which indicates that markets are starting to look historically very overbought. And if we do look at the FOMO, what can we realistically see? Currently looking at the Fear and Greed Index, we can see that this is 50 bang on in the middle, which is not really where I like to see the markets. I like to see it in between 50 and 75. So that's essentially where a lot of momentum trading is made, essentially. So the topic of this video is, of course, Micron. So Micron only previously had their earnings, and they were relatively good earnings. In fact, they were, in my opinion, really good earnings. They beat revenue by 1%, and they beat their earnings per share by 6%. But their earnings per share was up 157% year over year, and their revenue was up 46% year over year. So it's clear to see that this company is growing at a significant rate, and I think that's also reflected within their forward and trailing PE. So looking at the trailing PE for Micron, this is at 20.72 and the forward PE is at 10.56, and the current price to earnings for this stock is at 20.97. So realistically, if this revenue continues to pour in to Micron, we should see this stock, if it's going to maintain its 20 PE, essentially potentially double from here. However, that is not obviously always going to be the case. In fact, it could be quite unlikely. So previously, around 2, maybe 3 months ago, I did a video on Micron, and I put a price target here at 185. And if you remember, if you are an avid viewer of this channel, I think it was around, no, it wouldn't have been there. It would have been around here. It would have been around May, I would have imagined. So we saw earnings come out in June for this company. It was actually May 25th. No, sorry, it was June 25th. And from there, this stock just absolutely tanked. But again, these earnings were really good. So in my opinion, that was a massively unjustified sell-off. We saw it fall straight down to the 100-day EMA. But since then, it has now bounced back up. If you did hold it throughout that period, then well done. You've made your money back and more, obviously, but for me, I was selling when we saw this second head here. For right now, what can we realistically see for this chart? Well, we are still massively well above all of the EMAs, which indicates that the momentum is certainly on the side of the stock, especially with us being in a bullish crossover here. And if we do look at the Bollinger Bands, then we are actually in a sustainable position right now. We're closing up towards this 20-day moving average, and probably from there, which could be within 1 to 2 weeks, I personally would expect this to start to rise again. However, I am not a financial advisor. That is certainly not financial advice. Looking at the price targets for Micron, we can see that this is now predicted at an 11% gain on the average and a 50% gain on the maximum, with a minimum coming in at minus 40%. So what can we actually see for their financials? Now, the retention rate in this instance is an annual report in which I'm looking at, and here we can see that annually over the last 5 years, with this being a trailing 12 months, we can see a mean retention rate of 7.6%. Now, that is not particularly great, but it is good enough for me, in my opinion. Looking at the liquidity ratio here, this is a quarterly basis, and over the last 5 quarters, we've seen the liquidity ratio being relatively consistently, well, very consistently negative, and the mean is coming in at 0.6. Obviously, that means for every dollar in which this company owes, they essentially owe, well, they can only pay back 0.6 of that in liquid cash. Looking at their free cash flow, this is where it takes somewhat of a turn for the better. We can see the mean here is actually positive, but this is actually steadily increasing as well, which is really good to see again. So over the last 365 days, how many days will we have seen a positive return within this stock? Well, currently looking over the last 365 days, we can see that 55% of the days were positive, meaning that they were a more than 1% climb up, with 11% being within the neutral boundary and only 34% being a negative day. So as far as intrinsic valuation goes, what can we see for this company? Well, on the bullish side, I conduct a Graham's formula, intrinsic value near $200 at 194 with a margin of safety of 25%. This gives you an acceptable buy price of near $150. That is, of course, the bullish side. And if we go to the bearish side, this comes in with an intrinsic value of $116 with an acceptable buy price of 87. So currently it looks to be as if this stock is on the higher end of its valuation for its current price. And this is only then validated again by my own formula, in which gives me an intrinsic value of $204 and an acceptable buy price of 153, with the current price being, of course, 166. It's fair to say that this is looking as if it could still be a buy, especially maybe potentially long term, as this is a US company developing their products within the US, which is obviously really good for tariffs. So there is still a lot of potential for Micron, in my opinion. So what is actually affecting Micron going forward into this next year? Well, they recently came out with their forecast for their first quarter revenue estimates on their new HBM chips, and they essentially go on to say within this that they expect to sell out their capacity for 2026 within months. They also go on to say that they are shipping or sampling next generation HBM4 chips to key customers, which is seen as a high margin product going forward. Furthermore, back in June, Micron essentially boosted their US investment plan by $30 billion to essentially please Donald Trump. Obviously, Micron do develop and produce all of their products within the US, so they obviously don't pay anything in tariffs, which is essentially why I think this is such a strong company going forward, as the effect of tariffs will start to take place over time. Obviously, we will have seen the majority of the issues within tariffs now. It is September going into October, so it is to be expected that they will do well from being a US based manufacturer, but I'm not sure it will be as much as initially thought a few months ago, essentially, when compared to their Taiwanese and potentially even Chinese rivals. So what do you think about Micron? Do you think this is still a great company to be holding going forward, or do you think it's potentially had its time now and it might be actually time to sell out? Well, in my opinion, I still think for 2025, I expect it to get to $185 and potentially push up to 200. From there, I would like to reassess it again and see where exactly it goes. But that's just my opinion. Of course, my opinion is not to say it's going to be right. This is not financial advice in the slightest. You should always do your own research when analyzing a stock, because when you do invest, your capital will be at risk. So I hope you have enjoyed this video, and I will see you for the next one.